What is going on, y'all? Welcome back. We are here with another Wealth Wednesday. My name is Bryson Powers, your favorite Jacksonville realtor. And in case you can't tell, decided to switch up the scenery a little bit. Figured it was good. I needed to come over here and check out some things. This is one of my under contracts right now. We're talking about inflation today. I thought it would be a good topic to cover because we need it to understand some of the topics we'll be talking about over the next few Wealth Wednesdays. Talking about kind of the future of the housing market, what the president-elect plans to do with the housing market, and why real estate is essentially one of the best assets to own because it's an inflationary hedge, right? So what is inflation? Inflation is the rise in cost of goods and services. You imagine what a Coke cost, what was it? Back in the 60s or something, it was like a nickel, right? Today it's $2 and some change maybe. If you go get it from a vending machine, it's expensive. I mean, you're talking about what, a 40x increase or 4,000% increase in price. That's inflation, right? So inflation's caused by two categories. If you remember economics, or if you don't, you have your demand and supply curves, right? So when it comes to inflation, rising cost of goods or services, you're talking about a demand pull. So basically more people are seeking that good or service, or a cost push. That good or service now costs more money because of some other force. So let's talk about those. Right now, we are seeing in America a huge demand pull shift, inflation. We have the big three, right? The three things that cause a demand pull inflation are cut in interest rates, which means that it costs less money for you to loan out some money or to get a loan, right? So mortgage rates, for instance, are sub 3% right now. Take advantage of those. It also doesn't make any sense to save money. If you look at savings accounts right now, you get nothing, almost nothing. You're actually losing money putting it into savings account because inflation's just eating away at the purchasing power of that dollar. If you think about that Coke on an intra-year scale, right? You're losing 2%. So maybe that Coke is going to end up costing 2% more. So maybe $2.04 next year. But if you only put it in your savings account that's getting 0.5% interest rate, or even your checking account's just sitting there, that $2 is still basically $2. Maybe it might be $2.01 next year if you put it in that savings account, but then you're losing out on 3 cents. That's a loss in purchasing power. We don't want that. So you have cuts in interest rates, you have an increase in money supply as the second factor, which is exactly what the Fed's doing right now. If you don't know who the Fed is, that's the Federal Reserve, herein called the Fed, not the federal government or anything like that. The Federal Reserve, they're who controls our money supply, our monetary policy. They are pumping out money into the economy like it's nobody's business. This is to keep jobs afloat, this is to keep people in business, this is to prop up our economy because of things like COVID, right? And they were even doing this before COVID-19 hit, but COVID has definitely given another reason to start pumping money into the economy. Think of it like the stimulus check that every American got, $1,200 going into everybody's pocket. It's money we didn't have before. So that is factor number two. And then factor number three is actually a demand pull and a cost push factor. It is a rise in wages. For instance, here in Florida, we actually just passed a measure to increase the minimum wage to $15 an hour by the year 2026. Basically, over the next 5 years, we're going to be increasing it. It's going to start at $10 or $11 an hour and then rise $1 per year up until we hit $15 an hour, and then I guess we'll vote on it again, right? I have mixed feelings about this because one, obviously, I want a livable wage for everybody. I think that if you work hard, you should be able to live within your means and have a roof over your head and be able to provide for your family. I think that's, at the basic sense of it, that should be a thing. And the common sense sort of thing, the first thing you think of is, well, let's just increase their wages. That works in the short term, right? So that's a demand pull factor. More people are gonna have more money. So it's just people are gonna wanna get into the housing market, right? So you expect housing prices to increase. They're gonna want more goods and services, maybe stuff they couldn't afford before, now they can, at least in the short term. So maybe a new car or something like that, or maybe even something smaller on the low scale, like the new PS5 or Xbox Series X. I don't know what you decide to put your money in, but if you have excess to what you need to live, most Americans, let's be honest, are not going to save it, and they're probably going to consume rather than invest. So look for cost of goods and services to rise because there's more people demanding it. On top of that, it's a twofold thing because companies tend to like to keep their profit margin. It is why the cost of a good or service tends to rise because let's say they were making 30 cents a Coke beforehand. Well, they got to pay the bottler, up to $15 an hour by 2026. They need to increase the price of Coke to maintain their profit margins per bottle or per case, whatever they measure their metrics by. So not only are you seeing a rise because of the demand for something, but you're also seeing a rise because it costs more money. And one of the highest costs for companies is the cost of labor. So in essence, long-winded explanation, that is what inflation is and kind of the factors that affect it. You have your cuts in interest rates, which is what we're seeing right now. Mortgage rates are low. More people are trying to get into the home buying market. We're actually seeing a 40% increase in mortgage applications, which is huge. We're also seeing increase in money supply. The Fed is pumping in money. We're getting stimulus checks, and that comes from the Treasury, actually. I shouldn't say that's from the Fed. But we're just using the full force. I mean, everybody's just pumping money into the economy. We're buying back loans and all that good stuff, bonds, you name it. We're doing a huge repurchase operation here in the United States with the Federal Reserve. And then we're also seeing some states are increasing their minimum wage, which is increasing not only the demand, more people have more money, especially in that bottom bracket, the working class people have more money, they're gonna spend it on stuff rather than save or invest, most likely. And then that in turn is going to cause companies to increase the price of the good to maintain that profit margin. When all these things are considered, it's going to affect the housing market tremendously. You're going to see cost of labor, right? So people building these houses, expect new construction to be more costly because those big builders are going to want to keep their profit margins, just like any other company. You're going to see more people jump into the market. These interest rates are attractive. It's going to want to cause people to sell their home, buy that new home they wanted, get into the housing market from the rental market. And then we're also seeing increase in money supply, right? People are getting money from bailouts, from small business loans, all that good stuff. And more people are going to have more cash on hand. So I hope this made sense to you guys. I know it's a lot to take in, but it was completely necessary when we're talking about next week's topic, which is going to be Joe Biden's presidential plan for the housing market, his $640 billion plan for the housing market, and what effect it'll have, especially one point in particular that he has, which is to give everybody $15,000 who are buying a home for the first time in an effort to make housing more affordable. We'll talk about why I think that's kind of he's not really hitting the nail on the head there, but that'll be next week. So hope you guys enjoyed. I know it's been a long video. Thank you so much for sticking around, and we'll see you soon.